What if I told you the world doesn't run on oil, it runs on dollars? Every country that needs energy, which is to say almost every country, must first get US dollars before it can buy oil. Not because this is natural, not because it is fair, because this is how the system was built. That system is called the petrodollar. And for roughly 50 years, since the 1970s, it has shaped the global financial order. Let's strip it down so it actually makes sense. If you are a country without enough oil, you need to import it, right? To import it, you need dollars. That means you must earn dollars through trade, borrow them, or build reserves. And once you have them, a large portion of those dollars ends up flowing straight back into the US, into the government bonds and financial markets. So the United States sits at the center of the loop. You need dollars to buy oil. Those dollars go back to America and the cycle continues. This is the petrodollar system. But this didn't begin in the 1970s. The story starts much earlier. In 1913, London was the financial capital of the world. The British pound was the dominant currency. Global trade ran through sterling. Then came the First World War in 1914. Britain needed money on a massive scale. It began selling gold and borrowing heavily, especially from the US. Meanwhile, the US economy remained intact and expanded rapidly through wartime production. By the end of that war, the US held the majority of the world's gold reserves. So in 1944, at the Bretton Woods conference, 44 nations met and formalized what reality had already decided. The US dollar would become the world's reserve currency. It would be pegged to gold at $35 per ounce, and institutions like the IMF and the World Bank were created to support this system. For about 25 years, this arrangement held. Then in 1971, President Richard Nixon ended the dollar's convertibility into gold. That was the moment the system broke, in my view. The dollar was no longer backed by gold. It needed a new anchor. And that anchor came through oil. Between 1973 and 1974, following the oil crisis, the US and Saudi Arabia reached a pivotal agreement. Saudi Arabia would sell its oil exclusively in US dollars. It would invest its surplus oil revenues into US treasuries, and in return, the US would provide military protection and strategic support. This was later extended across other OPEC nations. From that point on, the most important commodity in the world was tied directly to the US dollar. If you wanted oil, you needed US dollars. That is the birth of the petrodollar system as we know it today. And it changed everything in my view. Because now global demand for energy automatically created global demand for the US dollar. Energy exporters accumulated dollars and recycled them back into the US financial markets. This gave the United States an extraordinary advantage. It could run persistent deficits, it could borrow at scale, and still maintain strong demand for its currency. For most countries, this sort of behavior ends in a crisis. But for the US, it became routine. For decades, this system was treated as if it would last indefinitely. But systems depend on trust, and trust can fracture. One of the most significant moments in recent years came in 2022. Following the invasion of Ukraine, Western governments froze approximately $300 billion of Russian foreign reserves. Now leave politics aside for a moment and focus on the signal. Dollar reserves were shown to be conditional. They are not just financial assets, they are political assets. If you hold your national savings in dollars, access to those savings depends on your relationship with the system. And for many countries, especially across emerging markets, this raised an uncomfortable question. What happens if we fall out of favor with the US? That question doesn't trigger instant change, but it introduces doubt, in my view. And doubt is corrosive in any financial system. Now let's be precise. There is no credible full replacement for the US dollar today. It still dominates global trade, central bank reserves, and financial contracts. The depth and liquidity of US markets remain unmatched, undoubtedly. China, particularly over the past decade since 2015, has been expanding the use of yuan in trade settlement, including energy transactions. At the same time, People's Bank of China has significantly increased its gold purchases. Gulf countries have in recent years shown greater willingness to accept multiple currencies in large-scale energy deals. And groups like BRICS, especially since the early 2020s, have explored alternative settlement systems that reduce reliance on Western financial infrastructure. This is not a sudden break in my view. It's a gradual shift. Dependence is being reduced step by step. That's the point I'm trying to make. Now consider the security side of the equation. The petrodollar system was never purely financial. It rested on a geopolitical understanding that the US would help secure global energy flows. But in recent years, tensions around key choke points like the Strait of Hormuz have increased. At the same time, global power has become more distributed. When the guarantor of stability appears less dominant, the participants in the system begin to reconsider their options. Power moves, capital follows. Now for the irony. As of late 2010s and into the 2020s, the US became the world's largest oil producer, producing roughly 12 million barrels per day. You might assume this strengthens its position, but it doesn't fundamentally change the system though. Oil prices are set globally. Domestic production doesn't eliminate exposure to global price movements in my view. And even at extreme prices, the numbers are revealing. At 12 million barrels per day, even if oil reached $250 per barrel for instance, that would generate just over $1 trillion annually, assuming full capture as government revenue, which is quite unrealistic. That figure is roughly comparable to the US annual interest payments on its national debt, which now exceeds $1 trillion. To put that into perspective, if your heart earned $1 per beat, you would be a millionaire in a matter of days and a billionaire within decades. But to reach $1 trillion, you would need to keep going for around 30,000 years. So even extreme oil prices do little to change the structural fiscal reality. And this brings us back to the core mechanism. The importance of oil in this system is not primarily about who produces it, in my view. It's about the currency in which it is traded. And as long as oil is priced in US dollars, global demand for energy reinforces global demand for the dollar, which is quite understandable. This is the foundation of the petrodollar system. So, is the dollar about to collapse? No, far from it. But the period of uncontested dominance may be ending. The future may not be a single system with one center of gravity. It may be a more fragmented structure with multiple currencies and competing financial networks. More complex, less predictable. The petrodollar system will not end suddenly. It will erode over time. And as with most major shifts in global finance, it will become obvious to the majority only after it has already happened. So the real question is not whether the dollar collapses, it is whether the world will continue to need it to buy their oil.